Now, it is a bloodbath on the Dalal Street as both Nifty and Sensex have crashed this morning. Sensex has crashed to over 1,000 points, while Nifty is down to nearly 300 points. Now, the rising geopolitical concerns amid the Russia-Ukraine tensions have spooked markets globally that include the country. My colleague Avni Raja is joining me from the Mumbai newsroom. Avni, the intensifying Ukraine crisis and a jump in oil prices to a 7-year high seems to be the reason for this stock market crash. Just break down for our viewers this particular reason and the other reasons that are associated for the impact on the markets.
Well, that's right. It has been a bad morning for the stock markets. In fact, at this point in time, as we speak, the markets have recovered from what they had opened. In fact, Sensex was down nearly 1,500 points when the markets opened this morning, currently down about 1,000 points. But the main reason for this is the rising geopolitical concerns, especially with regard to Russia, Ukraine. And this is spooked not just Indian markets, but across the globe. The markets have been extremely weak. And as a result, of course, India is also seeing the markets falling. Now, even in Asia, whether we talk about US, across the board, there has been a lot of weakness over fears that Russia could invade Ukraine at any time. In fact, this has also led to, like you pointed out, oil prices spiking to a nearly 7-year high, which is again another reason why this weakness is there. And specifically for India, if the oil prices remain at these levels, it could mean further inflationary pressures. Now that has another big ripple effect for India, because remember, until now, the Reserve Bank of India has kept the interest rate status quo, and inflation has been a concern, but this could change if the oil prices, in fact, remain at these elevated levels, and it could mean that interest rates further go up in India, and RBI is forced to increase the rates as well. Now, the other aspect, of course, with regard to US and why the US markets were also weak on Friday is with regard to inflation in US being at a 40-year high at about 7.5%. And following that, the commentary by the Fed about aggressive interest rate hikes there as well. This could have other ripple effects as well and impact India as well, because we have seen foreign institutional investors pulling out of India as well. So several factors here playing out with regard to the markets and why we are seeing a weakness in India. Back to you.
Absolutely. Avni, thank you so much for breaking it down for our viewers. I'm also now joined on the broadcast by Sunil Shah, who's a market expert. Mr. Shah, thank you so much for joining me on Mirror Now. We've been talking about this bloodbath early this morning as far as the markets are concerned. We're also talking about the global tensions, the intensifying Ukraine crisis that continues to loom large, and also the oil price rise, which is a 7-year high that Avni was also breaking down for us. If we talk about the significance of this sudden crash, if you can just break it down for us, how will it impact the people of the country?
Well, first of all, thank you for having me on the show. Avni, what she broke down for you, the situation, actually it is apt. And today's fall, I would attribute to only geopolitical situation, and the set of that set is that spiking oil prices. Now, what it means for our country and the people of our country. Well, we hope that it doesn't escalate from here, because then it will have the negative impacts on the overall economy of our country. As of now, the underlying fundamentals are good. They are good, and they are inducive for higher growth and higher growth trajectory. But if this crisis escalate, then it will have impact on the energy prices, which will hurt India very badly. It will have impact on other commodities, which again will hurt Indian economy very badly. And as Avni ji rightly said, that RBI will be compelled to raise interest rate, which will be the death nail for the overall growth which we envisage in the coming years.
Right, Mr. Shah, thank you so much for speaking to us. This is Avni Raja here, this side. Like you pointed out, you know, with the fact of RBI might have to increase rates. So far, it has kept the rates intact. Just wanted you to, you know, break it down for our viewers as to the implications of that. And it's also the fact that if we see the Fed also going into aggressive rate hikes, the ripple effect it could have, and foreign institutional investors' behavior also with regard to India. If you could just break down those aspects for us.
Well, first of all, I think more or less the Fed increase of interest rates have been factored in this market.
Okay.
Because if you see, foreign portfolio investors have been constant sellers, and this has been negated by the local investors and local institutions. So one thing is that what is not market has not factored in is the rate hike by RBI. Now, if that happens, then what will happen that the demand is still sagging. And we want that demand to re-emerge. Not only urban but rural demand is a key issue for us. And if you see those companies which has directly linked to rural demand, they are not doing well of late. So in the event interest rate go up, then the thing is that EMI of everything will go up, and the demand which we are expecting and anticipating, that the capex done by the government and which will followed by the private sector will not spend capex, and they will not do capex unless there is a demand. So it's a very key thing. We should have demand resurgence, otherwise that will have a impact on private capex. So I feel here that this is the key issue. The situation should not escalate from here, and the energy prices should correct and they go back to what they were 2 months back. Hello.
Right, Mr. Sunil Shah, thank you so much. Also, Avni Raja, thank you so much for joining me on the broadcast. This is what we are looking at the moment. It is a bloodbath as far as the markets are concerned, as the Sensex has nearly crossed 1,000 points. It's crashed down to 1,000 points, and Nifty also is down by 300 points. This is also being attributed to the rising geopolitical concerns amid the Russia-Ukraine tensions.